Hello and welcome to the weekly market metrics. I'm your host Samdarsh and we're in week 3 of 2026. See, we're 2 weeks into 2026 and the general uncertainty in the markets continues. Last week it was Venezuela, this time it's Iran. In all of this, we don't know where our trade deal with the US is headed. Anyways, let's check the charts and see how the price action played out. We'll also look at what is possible in the upcoming week. As always, let's look at Nifty first. Let's move to the Nifty's weekly time frame. Last week, Nifty formed a red Marubozu candle, and this week it followed up with an indecisive doji. Now, on a week-to-week basis, Nifty gained just 11 points and closed at 25,694. See, this may look like no movement, but the weekly range was 426 points or about 1.65% with a low of 25,473 and a high of 25,900. So clearly, volatility was present. On the weekly chart, Nifty is sitting near an important support zone which is around 25,650 and this is also near to the last week's close. A break below this level opens the downside toward 25,500 and then 25,300. But on the upside, with the US trade still uncertain, a move back to 26,300 looks difficult, and this level remains a key weekly resistance. Now coming to the Nifty's daily time frame. See, on the daily time frame, Nifty had only 4 trading sessions due to a late holiday announcement by the exchanges on Thursday, the 15th, for municipal elections in Mumbai. The daily chart for the week is dominated by long wicks, Monday and Tuesday on the downside and Wednesday and Thursday on the upside. This clearly shows a lack of direction and continued indecision. For levels, 25,600 is the immediate support and a deeper support sits around the 25,400 area. On the upside, 25,900 and 26,100 act as resistance zones. Now moving to the hourly time frame. See, Nifty continued last week's downtrend and stayed below the 50 EMA for most of the week, with only Friday attempting a move above it. Unlike many short-lived downtrend, this has sustained for nearly 9 calendar days. The short-term bias remains bearish, with price still about 110 points or roughly 0.45% below the 50 EMA. Let's move to the Nifty's expected range into the coming Tuesday, which is the 28th January expiry. See, based on options data, the ATM straddle closed around 198 points, up 5 points from last week's 193. Even with no movement in Nifty on a week-to-week basis, the straddle is pricing in close to 200 point range for expiry, that is 2 days away with a weekend in between. With Nifty spot closing near 25,694, the implied expiry range comes to about, on the upside, 25,900 and on the downside, 25,500. Now that's roughly a 0.77% on either side. Let's now move on to open interest. Now looking at the open interest data, on the call side, the 26,000, 25,800 and 25,900 strikes have the highest open interest. Whereas on the put side, open interest is relatively weaker compared to calls, with 25,700 and 25,500 being the 2 highest OI strikes. Overall, the 25,800 to 26,000 zone is acting as a clear resistance on the upside. On the downside, there is no strong build-up except for some support around 25,500. Now next up is SENSEX. Let's talk about the weekly time frame first. On the weekly time frame, SENSEX also printed an indecisive doji candle. After falling nearly 2,200 points last week, the index declined just 6 points this week to a close of about 83,570. And once again, SENSEX held up about the key support level of 83,200. The weekly range was about 1,400 points or roughly 1.65%, indicating continued volatility despite the flat close. Now moving on to the daily time frame, the picture is similar to Nifty. Every candle has visible wicks, lower wicks on Monday and Tuesday, and upper wicks on Wednesday and Friday, and this shows clear indecision. See, as long as the 83,100 zone holds, SENSEX is supported. but a break below this level can open up the downside toward 82,200. Let's now talk about the expected range of SENSEX till expiry. The next SENSEX weekly expiry is on Thursday, 22nd January 2026. The ATM straddle closed around 844 points, almost unchanged from last week. Now, based on this pricing, the implied expiry ranges on the upside 84,415 and on the downside 82,725. Now, these are broadly the same levels we discussed last week. Moving to Bank Nifty now. Let's start with the Bank Nifty's weekly time frame. Unlike Nifty and Sensex, on the weekly time frame, Bank Nifty gained about 844 points or 1.42% and closed above 60,000 at 60,095. Now, Bank Nifty has been relatively stronger than Nifty for 2 weeks in a row. Last week, it fell less than Nifty, and this week it moved higher while Nifty stayed flat. This shows banking stocks are outperforming, while non-banking stocks are still dragging Nifty. And with HDFC Bank results coming up, the next move in Bank Nifty will be worth watching. Support and resistance levels remain the same as last week. Key supports are 59,000 and 58,600, while resistance is near 60,360. Let's now talk about the daily time frame. See, on the daily time frame, Bank Nifty printed 4 green candles this week. It closed near the 60,150 but failed to close above it. A close above 60,151 would have marked the highest daily close for Bank Nifty. On the downside, 59,200 is the immediate support with 58,700 below that. On the upside, 60,150 and then 60,437, which is the all-time high, act as key resistance. Let's now move on to the hourly time frame. On the 1-hour chart, Bank Nifty shifted from bearish to bullish last week. Monday, Tuesday and Wednesday chopped around the 50 EMA, but Friday saw a clear breakout above the 50 EMA, and the index has stayed above it since. And with the all-time high less than 0.6% away, the short-term bias remains bullish. Moving on to ROC. In the third week of 2026, Nifty and Sensex remained largely flat, while Bank Nifty gained 1.42%. On a year-to-date basis, Bank Nifty is in positive territory, up 0.86%, and Nifty is down 1.67%, while Sensex is lower by 0.58%. Let's talk about sectors now. Talking about the top sectors this week, metal was back in action with a 4.55% gain this week, just behind PSU Bank, which topped the chart with 4.8% gains. Whereas IT rose 2.79%, and this was largely driven by Friday's move. Commodities gained 2.71% and Bank was up 1.42%. Metal and commodities were the new entrants in the top 5 this week, while the remaining 3 sectors continued the top 5 from last week. Now, talking about range and expiries, Monday had the highest daily range for both Nifty and Sensex. Tuesday saw the highest range for Nifty Mid-Select, while Friday recorded the highest range for Bank Nifty. The 5-day average range in Nifty jumped to 270 points from 205 points. Let's now talk about the expiries. This week's Nifty expiry opened with a better premium at 118 points compared to last week's 85. However, the index moved 200 points down, then 118 points up, again fell 216 points, and finally bounced 153 points, closing just 57 points lower than Monday. Now, this clearly shows realized volatility running higher than implied volatility and how ranges are expanding in 2026. Overall, it was a relatively tough expiry for option sellers. Moving on to Sensex, Sensex expiry was moved to Wednesday from Thursday due to a late trading holiday announcement by the exchanges. And it was anything but calm. Just look at the 5-minute chart of 13th Jan as the index moved more than 0.5% 5 to 6 times during the day, even though the ATM straddle was priced at just 375 points or about 0.45% at the open. So this week, both expiries were extremely challenging, especially for option sellers. Let me know if you managed to get through these 2 expiries without taking a big hit to the capital. Now moving on to India VIX. See, India VIX rose another 4% this week to close at 11.37. Now, is this volatility building up because of the budget? I would like to think so. Now, moving to commodities this week. In the commodity space this week, silver clearly led the pack with a strong 15% move, and gold followed with a steady 3% gain, while crude oil added around 1.5%. See, copper appears to be taking a pause this week after a sharp rally over the last 6 months. Natural gas, true to its nature and in line with expectations, corrected again and was down roughly 2% this week. To summarize all of this, markets remained largely range-bound this week, with Nifty and SENSEX closing flat while BANKNIFTY continued to outperform and moved higher. Volatility picked up meaningfully despite muted index closes, with wider daily and weekly ranges and a steady rise in option premiums, pointing to active two-way trading. See, sector performance was mixed, with metal and commodities emerging as fresh leaders, while banking remained strong and broader market participation stayed selective. And India VIX rose again, suggesting volatility is building ahead of the upcoming budget, even as price direction remains unclear. Overall, the market tone is sideways with rising volatility, whereas direction is missing and ranges are expanding. It's a tough market to trade, but Januaries are rarely easy. Now, moving on to what caught our attention this week. For one, India is moving towards formal crypto regulation, with SEBI likely to emerge as the primary regulator for crypto exchanges, ending years of ambiguity and bringing clearer oversight. Secondly, a Mint article highlighting how FPI sharply rotated in 2025, pulling out $1.67 trillion overall, but selectively allocating capital to cyclical and commodity sectors while aggressively exiting IT and consumer stocks. You can check this link out in the description below. And last, if you are interested in reading about what's happening in Iran and how it all started, I would recommend this New York Times piece titled "Inside Iran's Protests: How a Plunging Currency Set Off Wide Unrest." All of these links are in the video description. Now over to what to expect in the upcoming week. See, next week is a full 5-day trading week. There are no major events lined up, but any update on the trade deal or something unexpected could still emerge over the weekend or during the week. Also, with this being the second last week ahead of the budget, volatility may still continue to rise. Talking about the markets, the overall sentiment remains range-bound. In commodities, silver is the big question mark. Whether it reverts from here or continues to run higher is still an open guess. And with that, we wrap up this week's weekly market metrics. If you find this series useful, don't forget to subscribe the channel. Until then, stay curious, stay steady, and enjoy your weekend.